Looks like Bulls held onto the level, but didn't close the upside gap into CPI, which might be an early indication of some weakness. Um, mostly flat on Friday's high. So um, not really not really a very impressive push by any means, but back off of the lows and the 62 like 25-30 support held in the pre-market. So we'll see what CPI brings tomorrow. Obviously that's going to be very important. Um, Out here, yields at the top end of the curve continue to creep up a little bit. The 20 and 30 year approaching 5%, but also largely pricing in that higher expected CPI. I think dollar is too a little bit as it creeps up. If CPI comes in hotter than expected, then yields will have more room to move up from there. But if it comes in as expected, I would say that most of the damage will already be realized. Um, However, even with that, correlation rising rapidly both on the 1 and 3 month time frames, so there is some risk off into these inflation prints, and some probably concern that they could come in higher than expected. I think the room for upside surprise is pretty decent. Um, Commodities pretty flat today, but apparently falling across most sectors. I guess some turnaround in agriculture and metals a little bit, materials, but oil and precious metals down, copper down today. Um, Still no significant increase in bond volatility. Still at very low levels, but up from the 2022 low. Leverage in the carry trade continues to rise as yields at the top end of the curve continue to climb. And we are starting to see a little bit of leverage come in at the short end. Not a ton, but like that's also just kind of creeping up. Leverage at the top end of the curve is almost back to where it was in March, out on the 10 year. And then, obviously that is in an effort to contain volatility, which is creeping up. It's still at like negative 11.95%. Um, not a lot of, not too much bear steepening going on between the 10 and 2 or the 30 and the 3 month. But some, I mean, the 33-month spread's at about, what, 6.3 right now. Skew ticked up on Friday. Probably back down a little bit today. Breadth's still narrow, but stocks above their 20-day moving average falling a little bit more sharply. Um, Correlation between VIX, cash VIX still falling, even with VX up today, and VIX 3 month both pricing in some event vol risk as we go into CPI PPI. Fed fund futures, interestingly, up on the June of 2026, but down for Jan of 26 and for September of this year. And the bear steepener picking up slightly, uh, up to 0.529. Very small uptick. Flat. I mean, there's really not much to say about today. We didn't push the all-time high. We didn't fail the prior low. So just nothing. Anyway, thank you guys so much for tuning in. I'll see you tomorrow. Hopefully CPI yields a little bit more interesting price action as we move into OPEX at the end of this week. Don't get me wrong. Even a hot CPI print, given gamma and given the fact that SLD doesn't start until Wednesday, could mean that at least the initial part of the day or the initial shock of even hotter CPI could be eaten up by current positioning on the chain. So don't expect like hot CPI to just automatically equal like 2% downside. As we get closer to OPEX and SLD starts to resolve, more downside room will open up. But don't bet on like far out of the money puts and shit without any kind of confirmation. All right. Um, I hope that protects some of you from blowing up your ports on stupid shit. Anyway, that's about it. Thank you guys. Later.